The dollar and yen were both lifted mildly by risk aversion as investors lightened up their position on risk markets ahead of Bernanke's speech. The S&P 500 has pulled back to close below the 1400 level for the first time since early August, while the Dow barely closed at 13,000.71. The Kiwi and Aussie are the worst performing currencies this week with the current market sentiments. But the European majors, the yen, and even the Canadian dollar, have managed so far to stay in range against the dollar. Technically, the dollar index is still holding on to an important support level at 81.18, as well as a medium-term rising trend line. Today's speech from Bernanke will be key to determining dollar's overall direction. Fed Chairman Bernanke will deliver a speech titled, Monetary Policy Since the Crisis, at 2 p.m. GMT today at the Jackson Hole Economic Symposium. All eyes will be on hints of QE3 or any other form of stimulus. Expectations have built up since the Federal Open Market Committee minutes for August meeting revealed that many members judged that additional monetary easing would likely be warranted fairly soon. However, some pointed out that Bernanke could refrain from giving any clear guidance as firstly, the message was already delivered in the meeting's minutes. And secondly, there are big event risks ahead in Europe in September, and the upcoming elections in the US. Instead, Bernanke could just opt for focusing on the lessons learned since the current framework was laid out 2 years ago. And this week's retreat in risk markets argue that investors are indeed not too convinced that Bernanke will deliver something significant. In the Eurozone, Spanish PM Rajoy said after a meeting with French President François Hollande that Spain would not request further assistance until it's known exactly what's on offer. However, the country is running short of money, and a Valencia official recently stated that the region will need another €1 billion from the Regional Liquidity Fund. Meanwhile, other regions have hinted they may need to make similar requests. European Central Bank member Asmussen from Germany insisted that the ECB would only act in parallel with the European Stability Mechanism and only short maturity bonds will be purchased. He also required involvement of the International Monetary Fund in setting conditions of new bond buying. According to Asmussen, in his opinion, the IMF will be involved in setting the economic adjustment programs because the IMF of course has unique know-how and a high leverage as an external policeman in these cases. On the data front, UK GFK consumer sentiment was unchanged at -29 in August, missing expectations of -27. Japan PMI manufacturing dropped to 47.7 in August. Unemployment rate was unchanged at 4.3% in July. Household spending rose 1.7% versus expectation of 1.2%. Tokyo CPI core dropped less than expected by 0.5% in August, while national CPI core dropped -0.3% year-on-year. Industrial production dropped -1.2% month-on-month in July, while housing starts dropped -9.6% year-on-year. German retail sales unexpectedly dropped -0.9% month-on-month in July. Looking ahead, Eurozone CPI flash and unemployment, Canada GDP, US Chicago PMI, factory orders and the University of Michigan confidence final will be released. The dollar index remains soft this week but nonetheless is holding on to 81.18 support as well as the medium-term trendline support. There is no confirmation of a reversal yet. Indeed, the whole uptrend from 72.69 could still extend to a new high above 84.10 if the dollar index could defend the 81.18 support level successfully. And break of the 82.28 resistance will indicate that such an uptrend is finally resuming. Nonetheless, a break of 81.18 and the trend line will indicate that the whole medium-term rebound from the 2011 low of 72.69 has finished. And in that case, a much deeper decline will be seen ahead for the 78.60 support and below. As bearish divergence is seen in the weekly moving average convergence divergence, we're leaning towards neither case for the moment and will stay neutral until a breakout. US dollar, Canadian dollar daily outlook continuing to stay in range of 0.9842 and 0.9948. The outlook remains unchanged. However, another fall cannot be ruled out yet. But again, we view the fall from 1.0445 as a corrective move and expect strong support ahead of 0.9799 to contain the downside and bring a reversal. On the upside, above the 0.9948 minor resistance will flip the bias back to the upside for 1.0065 support turned resistance. A break will confirm completion of a corrective fall from 1.0445 and target 1.0231 resistance and above. In the bigger picture, firstly, price actions from 1.0656 are viewed as corrective, with no change in this view. The depth of the fall from 1.0445 raised the possibility for such a consolidation to extend further. But after all, we are staying bullish and expect a rebound from the 2011 low of 0.9406 to resume later to 38.2% retracement of 1.3063 to 0.9406 at 1.0803. And we'll maintain this bullish view as long as 0.9799 support holds.